Pioneer brand canola with Optimum Gly, the highest yielding glyphosate tolerant trait on the market. What's next in canola happens here.
Okay, joining us right now is market analyst with agmarket.net. He is based out of North Dakota. It is Tyler Schau. Hey, Tyler, how's it going?
Good. How are you doing, Sean?
And I'm doing really well. I heard it's a bit dry there in North Dakota.
It's been very dry for the last several months. Like I can't even off the top of my head tell you the last time we had a meaningful precipitation event. Been hot, a lot of wind. This last weekend, the winds were brutal on Saturday, 70-mile-an-hour winds, and sparked up some fires in northwest North Dakota. So if you got a chance, say a prayer for those folks up there. They've kind of had a brutal past few days, and some tragedy has struck that area.
Is it putting some concern in the fact that we're dry here in the fall? Is it putting some concern into where we're going to sit at the beginning of 25 for that area of the Northern Plains?
For myself and for a lot of my customers that I talk to, yes. And it's a pretty wide swath of the state of North Dakota. A lot of times we'll get, pockets that get dry. This is one of those scenarios where we really haven't seen meaningful rain for really I won't say the entire state. Eastern and southeastern has done all right, but for the western two-thirds of the state of North Dakota, it has been dry most of summer, all of fall so far. And, history tells us that major droughts develop in the fall and persist through the spring, or the winter and spring. So it's got some of us nervous, myself included. It would sure be good that, this thing would change and we'd get I don't wish this on the ranchers, but a lot of snow,
Yeah.
maybe a cold winter that might kind of help to change the outlook as we move forward. But as of right now, it's got shades of fall of 2020 was very similar to this. Really dry, late summer, dry through the fall, very little snow through the winter, and then what happened in 2021, the spring and summer. So
Yeah.
we could sure wouldn't mind seeing that pattern change.
Western Canadian farmers remember 2021 very well. Still a hangover from how dry 21 was and how poor those yields were, and it kind of impacted people's marketing going forward. A lot of people tied to production contracts with grain companies they thought they were maybe a certain percent sold, found out they were like 125% sold, right? Really short on some of the production, and it definitely created some penalties and some problems for a lot of growers in the prairies. Okay, let's talk about the markets. And it's interesting to me what's been going on here. I think from a farmer sentiment standpoint, there is maybe a little bit of it feels like there's some short covering. It feels like we're maybe would you describe right now as we've stabilized a little bit? Is that fair?
I think that's a very fair comment. Yeah, we just had that awful run in the markets really from the end of May all the way till mid-August. A 2.5, 3 month stretch where it didn't really matter what grain you want to talk about. Markets just kind of eroded, and really felt like that was the point when a lot of excuse me, producers, I don't want to say threw in the towel, maybe came to the realization that we weren't in the same market that we were in 22 and 23. And they kind of changed their mindset, and they change their mindset, and then we get kind of a non-seasonal rally that starts in mid-August. We usually don't see that rally in the grains anyhow until we get to about this time of the year. Mid-October is when we kind of see that seasonal trend in soybeans, where we kind of start to see that spike. We saw that about 2 months earlier. Kind of run into some resistance on charts. Also, the news hasn't been exactly fundamentally friendly to any of the grain prices, especially corn and beans here over the last few weeks. But we're just kind of chugging along. Market doesn't want to seem to just go blasting lower like a lot of people had feared. But in the same times, it's not just skyrocketing higher like a lot of folks had hoped it would.
Yeah, we got May 25 corn at just under 450 as we're having this discussion. That
Yeah,
seems a lot better than the 350 that some people were talking about.
Yeah, well, I mean that's a good reminder. September corn went off at about 365. At one point, had touched 350, and that's what a lot of us were talking about. When we're in a carry market like this, your deferred contracts will typically go down to where the previous contract went off the board at. And so we watched September corn really tank, and kind of had the assumption we'd see December corn do the same. It does feel like that was the turning point where the old crop did get moved. Finally, the producers maybe realized there was a large old crop out there. They'd been sitting on a lot. There was a lot in storage. I always say this somewhat jokingly, somewhat truthfully. Never underestimate the ability of the Western North Dakota farmer to store all of last year's crop. Uh, um, and it felt like that was going on all around the Corn Belt.
Yeah.
But they kind of uh, turned it all over there in around that time, and we kind of felt like maybe there'd be more pressure, and the market kind of pulled a 180 on us and drifted higher, which is a good. I mean, it's always a good thing, but you got to be positioned for it, and that's the kind of things you got to be paying attention to.
So having said all that, do you think it shifts the strategy at all for growers, or are we still in a sell? What I've been the most frequent strategy I've been hearing from analysts is, what, be prepared to take some risk off the table, sell into some of those rallies. Is it still that kind of a market?
That is our approach. We're selling into the rallies. Uh, our company is fairly heavily sold on new crop corn, or corn that we're harvesting right now. We've
24
been that
crop.
way.
Okay.
Yeah, we've been that way for quite a while. We're focusing now on what do we do with the 25 crop to get some risk mitigation in place, whether that's corn, beans, wheat. When you're in the northern plains, marketing next year's wheat's always difficult. We just talked about the issues producers got into in 2021. And this isn't bashing any market or anything. The Minneapolis spring wheat options are difficult and illiquid to purchase, especially when you're trying to go out to the new crop year. So
Yeah.
there's some risk there if you're going to look at doing anything on new crop in that fashion. But we're using these rallies, that we received over the last few weeks to increase our hedge position or protected position, both on old crop, and then just because we say as a company we're 100% sold, does not mean that every one of our customers is. Those are recommendations we make. We have a lot of customers that are way behind, so we've been trying to use those rallies to make sales into, to roll our put options up, increase our coverage, and hopefully, hopefully if we're rolling puts up, the market keeps going higher, and we left a little bit on the table. But we strongly encourage having, put orders in. These little drawbacks we've got here. Take a look at what you've got in inventory. Take a look, at where prices are.
Mm.
Even if it's a wish order, throw them out there. Have them working either at the elevator with your broker, some way, shape, or form. So if we do get some type of geopolitical event that sends prices higher, it happens rather than it hits and then we think it's going to go even higher.
Yeah, I was talking to a grower last week who said, I'm 100% sold on my 24 crop on corn, and he wanted that, risk off the table. But he said, you know what? I'm going to participate if it goes higher. He actually bought this is not now he's not hedging. Now he's trading, but he bought some calls.
Mm-hmm.
So if it does go higher, he still feels like he participated. So there's lots of ways to do this. How do we define a rally? I've had customers ask that. Okay, you're telling me to sell the rallies. How do I define a rally? How do I know? How do I know when I should be selling? What does that mean to you?
So I will rely on what I first learned when I got into this business. I taught for a lot of years and then started in the commodity business in 2020. And one of the first lessons I learned was this is based on 25 years of just looking at charts. 30 cents in corn, 40 on wheat, 60 on beans. And so that's kind of all I've used that. It works. Just because I say that's what it is does not mean that's what a rally is. That's just what I've found probably more important in this industry or this business than anything, and in producers marketing, is to have a set of rules, and follow those rules. Does that make sense?
It does.
Um, hey, if we rally 30 cents, and corn, I'm going to reward that. If we rally 40 cents on wheat, I'm going to figure out a way to, I'm either going to sell some, doesn't have to be all, doesn't have to be a lot. I'm going to make a sale. I'm going to buy put options. I'm going to do something on that 40-cent move to reward it. And so I don't know that, that's necessarily got to be a rule that everyone follows. It's one we try to follow, or I do with my customers, and it seems to work. If you don't have that type of system or rule, you end up just shooting from the hip all the time. And that can end up in your favor, but a lot of times it does not.
Yeah. If you have to be a goldfish, but you also have to really, yes, that's true, right? Short memory
Mm-hmm.
on bad decisions. That's
Mm-hmm.
farming or marketing, whatever. But you also need to remember those rules that you said, hey, when this happens, I'm going to do this. And whether you're going to tell your spouse about those rules so they can kick you in the shin, or your farming partner, your kids, your dad, whatever. Just you need to hold yourself accountable somehow, some way to what some of those rules were, so that you don't get yourself in trouble. What's your thought on canola? We've got obviously a lot of canola in Western Canada, popular crop in North Dakota. It's had it's above 610. It's around 613 at the time of us having this conversation. What's going on?
It's been a wild market with the China Canada geopolitics that have been going on with tariffs. We came out here. It seems like just a few weeks ago, but looking at charts, it was well over a month ago now, where
Yep.
China came in and put a fairly sizable tariff against canola oil, or Canadian canola oil. Um, the market's pretty well forgotten about that over the last several weeks. It does feel like, the dryness has, especially here in the late season, has impacted yields. Talking to producers in North Dakota, at one point they were feeling like they were going to have a pretty good crop. They did have a decent crop here. I've heard rumblings that maybe there was some production issues in Canada. I don't work with a lot of Canadian producers, so I don't hear that, directly. But from what I've read, there's been some production issues which have kind of
Yeah.
pushed supply.
Less, Tyler, less yield than people thought there was going to
Thought there was
be.
going to be.
Yeah, yeah,
Yeah.
yeah.
Yeah, kind of the same thing here. Big high hopes, and then maybe it was just a little bit disappointing for where their hopes were at.
100%.
Um, I think the story in canola moving forward, or in my opinion, this is for both soybean oil and canola, is what, if the U.S. government steps in and does anything on the used cooking oil that's been imported into the U.S. and used in the renewable diesel program, especially in California. If we can get some, I guess the best way to put it, some spine, where we say, hey, we're not going to allow for that anymore. We're going to cut that flow off. I do think that boosts demand for both soybean oil and canola oil domestically in North America, and will help considerably. But that's a hope strategy, and I've found it's maybe not always the best strategy for marketing, hoping that something comes out of Washington in your favor. We can't even get a farm bill passed. So,
Well, that is true. Yeah. If I always find if you need, if you look at your wish list of things to happen, and any of that wish list involves Congress coming through on something, I'm just saying,
yeah,
just saying,
yeah,
you may want a different list.
I would agree. But we were prepared. Same thing for canola to, when we blasted down below 550 on the board on November canola.
Yeah.
It was kind of we were a little bit nervous. Now, we did have a lot of producers use put options. Don't forget there are put options against canola. The Canadian grower probably works a little bit better because it's in Canadian currency and it's in metric tons. And U.S., we have no idea what a metric ton looks like, and So there's a lot of math and a lot of scratching of heads, but we can figure out how to, put puts on that can somewhat protect, what your cost of production or break even is. And so we did have a lot of producers that were utilizing those tools.
Yeah.
And then, we did catch that little rally there in late August that allowed a lot of our producers to get some cash sales on, and it's one of those weird crops where some of my producers have no problem storing it, some of them hate it, and they want to move it right off the combine and get it gone because they've had some bad experiences storing canola through the winter. So it's a little bit of everything, seems like.
Yeah, and if you referenced that November 24 chart where we did dip below 550, and if it was just May where we were at 700.
Yeah.
We got $150 a ton movement. Like we're all over the place on canola. I haven't looked at some of the VIX ratios, the volatility ratios when it comes to the different commodities, but canola's got to be kind of near at the top. I probably excluding cocoa and things like that.
Yeah.
But for the main base commodities that we're growing in this region, kind of feels like it's the most volatile, isn't it?
It has been very volatile. A lot of that has to do with the managed money. Remember, they just kind of like they were in all the other grains, they were massively short, um, and really pushed that maybe further. I believe, and I don't have the chart in front of me. At one point, they were a record short in canola at some point this summer, if I remember correctly.
Yeah.
And then we saw a lot in all those grains, saw a lot of buying back of the managed money. And, that love them, hate them, right, wrong, indifferent, they're in the marketplace. You got to figure out how to use them to your advantage. And one of those advantages is, hey, when you come off a 550 on November canola just on September 16th, and we hit 630 just 2.5 weeks later on October 7th. That's a spot where we've got to reward them for buying back those positions.
You referenced the UCO, the used cooking oil out of China. Sometimes the mixture of palm oil. It's impacted the market. How have you seen the abundance of the UCO coming into the U.S.? How has that impacted canola and soybean trade? How is that working its way back to the grower? What's happening?
Well, I think the main impact was, I think the best way that I can describe this in simple terms for my simple brain to understand is you had a lot of expectations in 2022 and into 2023 as these renewable diesel plants are being announced, as they're being constructed, and as they're hitting the finish line and opening up. And there was this expectation that they were going to gobble up a lot of beans, a lot of canola, and all of that oil was going to go directly into the renewable diesel plants. And so we basically primed the pump really as far as what we were expecting for demand, and maybe got a little ahead of the skis because all of a sudden here's this flood of used cooking oil coming in from other countries that we weren't really planning on, right?
Yeah.
And I get to work with some pretty smart individuals through John Stewart and Associates, and get to go to some conferences where that was the big talk, was just the demand driver that these renewable diesel plants were going to be for domestically grown oil seeds. And all of a sudden it was just like the rug got pulled out from under us when the rubber met the road, and we're like, we're not using as much as we thought we would at this point. And when you dig deeper, you find out that they're not, because the blender or the diesel plant is they're getting that subsidy, even though they're not purchasing domestically grown oils.
Yeah.
They're getting it from somewhere else. And the idea is, China's sending over palm oil with a French fry in it. It's not used cooking oil. They're just saying it is, and they're harvesting that subsidy, and everyone wins, but the U.S. and Canadian farmer.
Yeah, we've been talking here on Real Ag Radio a lot about 45Z and what that could potentially, we're still waiting for some of those final details from the Department of Treasury, and that domestic feedstock that some members of Congress on both sides, on the Senate and the congressional side, have been pushing. Does that allow for Canadian canola, or doesn't it? And how do you define domestic? That there's more to come on that front. Hey, to wrap up, before I let you go, and I appreciate your time here, what's the tough for the farmer right now as we sit? What's the toughest decision?
I think the toughest decision is going to be on what do I start, how do I start legging into some protection for next year's crop? You kind of talked about how canola was, not too long ago at $700 a ton. You look out to November of 25 and canola's sitting at 640. You look at September spring wheat 2025 at 692, almost $7 a bushel on that price. So, I mean, it's real easy to look back 2 years ago and be disappointed by those prices. But if we go back to 2020, and I would have said, hey, you could sell next year's spring wheat at $7, I'd have had a line of farmers with trucks already ready to go, sitting out in my driveway. So I think it's really important to don't lose sight of the forest because of the trees. Do I love $7 wheat? I'd rather sell $10 wheat. But if we take a step back, $7 wheat's not a bad price. You shouldn't maybe shake too much of a stick at it. And you can see that in all the crops, in my opinion. Some relatively decent prices given where we've been the last 10 years, maybe not necessarily the last 2 years, but something to pay attention to.
Hey, Tyler, really appreciate you joining us here today. That's awesome stuff, and appreciate the insight.
You bet. Take care, Sean.